What if I told you the greatest investor alive is sitting on $300 billion in untouched cash and refusing to spend it on purpose? Not out of fear, not out of doubt, but because he's waiting for your panic to become his profit. Warren Buffett nearly dropped $10 billion on a single stock this year. He backed out at the very last moment. Why? Because the rich don't invest based on hype, they invest with precision. In this video, you'll discover the 7 strategies Buffett uses to protect his fortune, outsmart market chaos, and strike when the world is weakest. And later in this video, I'll reveal the one stock Buffett finally bought after rejecting dozens and why it could signal the next trillion-dollar opportunity. What separates a billionaire's patience from your panic? Strategy 1. Wait for the fat pitch. Warren Buffett's approach to investing isn't rushed. He once said, "The stock market is a no-called strike game. You don't have to swing at everything. Just wait for the right pitch." That's the entire premise behind his $300 billion cash position. He's not afraid to sit and wait, sometimes for years, because he knows the fat pitch will come. And when it does, it changes everything. The average investor buys out of fear or boredom. Buffett buys when the odds are stacked in his favor. He's not avoiding action. He's sharpening his swing. Why do most people lose money in the market while the rich keep winning? Strategy 2. Don't chase. Position to accumulate. When everyone's chasing trends, Buffett positions quietly. Take Apple, for instance. In 2016, he bought $1 billion worth of Apple stock, not during a peak, but when others were skeptical. Today, that investment has ballooned into over $160 billion. Why? Because he understood the company, its moat, and its potential. He didn't chase hype, he accumulated value. While most people react, Buffett prepares. And that mindset has built one of the most successful portfolios in history. What if boredom could make you rich? Strategy 3. Embrace boredom. It's where the money is. Buffett once said, "The stock market is designed to transfer money from the active to the patient." Think about that. In a world addicted to movement, Buffett makes inactivity his edge. He'll go months, sometimes years, without a major investment. Why? Because he's not interested in being busy. He's interested in being profitable. Most people confuse action with success. But if you're always busy reacting, you'll never have the clarity to strike when it matters. Are you treating cash like a burden or your biggest advantage? Strategy 4. Hold cash like a weapon. In 2024, Berkshire Hathaway had more than $189 billion sitting in cash, more than most countries' GDP. Is that money doing nothing? Not at all. Buffett uses cash as his ammunition. In 2008, while others were panicking, he swooped in with billions and made a $10 billion profit on Goldman Sachs. That's the power of cash. It lets you move fast when the market slows down. Cash isn't a missed opportunity, it's future firepower. Question of the day. What's the hardest part for you, holding cash and being patient, or resisting the urge to follow the crowd? Let me know in the comments. Are you investing in things you don't even understand? Strategy 5. Master your circle of competence. Buffett doesn't touch what he can't explain. Crypto, meme stocks, trendy IPOs? Not interested. He once said, "The most important thing in investing is not how much you know. It's knowing what you don't know." He invests only in industries he understands. He studies them, builds conviction, then strikes. Your edge isn't in being early, it's in being educated. Can your emotions sabotage your bank account? Strategy 6. Emotional control is a financial skill. Let's be honest, investing is emotional. When markets crash, fear sets in. When stocks rise, FOMO takes over. And that's why the average investor consistently underperforms the market by 2 to 4% annually. Buffett's edge isn't just strategy, it's psychology. He doesn't panic, he doesn't chase. He responds with calm, calculated moves. And that emotional discipline has made him billions more than others, with higher IQs but lower EQs. Is your next breakthrough hidden behind the word no? Strategy 7. Saying no is a wealth move. The most powerful moment from the recent Berkshire meeting wasn't the $10 billion they almost spent. It was the fact that they didn't. Buffett's discipline is brutal. He once said, "The difference between successful people and really successful people is that really successful people say no to almost everything." That's how he protects his capital and waits for generational opportunities. That $10 billion wasn't wasted. It was preserved until the right deal appears. Are you collecting random assets or constructing real wealth? Strategy 8. Design a wealth architecture. Most investors think building wealth is about picking good stocks. Buffett thinks like a designer. He builds systems, not guesses. Look at Berkshire Hathaway. It's not just a portfolio, it's a machine. Every part fuels another. His insurance companies produce billions in float. That float funds investments. And those investments protect the business that created the float. It's not luck, it's design. Buffett doesn't scatter risk. He layers resilience. While average investors rely on isolated wins, Buffett's structure ensures that if one piece slows down, the others still move forward. The takeaway: don't build randomly, build intentionally. Treat your finances like a house, not a lottery ticket. Could one decision multiply the value of every other one? Strategy 9. Build synergy into your strategy. Buffett's power doesn't just come from what he buys, it comes from how those purchases work together. That's the secret of synergy. He doesn't just diversify, he multiplies. His businesses feed each other, protect each other, and grow together. It's how he's weathered market crashes, tech revolutions, and recessions, while others crumbled. So how do you copy that? Start by connecting your assets. If you own real estate, can it generate income to fund other investments? If you run a business, can your profits fuel a retirement portfolio? Buffett doesn't just invest, he orchestrates. When your assets support each other, wealth compounds faster. And your financial future becomes more than survival. It becomes unstoppable. What happens when all the right signals align? Bonus strategy: only move when the signals align. Warren Buffett nearly made a $10 billion bid for Skechers, but ultimately backed out. The footwear brand was later acquired by 3G Capital for $9.3 billion. What's Buffett's latest move? Investing in New Holdings, a fintech innovator in Latin America. This company is transforming digital banking in Brazil and beyond. Why did Buffett buy in? Strong fundamentals, explosive growth, and a moat no competitor can easily cross. Buffett saw long-term dominance. When the pitch was right, he swung. Now that you know how Warren Buffett truly builds billions intelligently and not emotionally, you're going to need to know this next move that separates you from the 99% who fail to invest like the wealthy do. If you don't know this one lesson, you will spend the next 30 years reacting to markets, while losing money year over year. The secret isn't speed, it's strategy. I'm unlocking the next layer of wealth-building strategy, designed to get you there faster, smarter, and with more confidence in our next video. See you in our next video.